Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, and I'm joined by my co-host for the day, and that's Nathan Peterson. He's a director of derivatives at the Schwab Center for Financial Research. But let's bring in our next guest for our cash tag segment. That's going to be Megan Brantley, the Vice President of Research at LikeFolio.com. Thanks for joining us, Megan.
Thanks for having me, guys.
All right, so we're talking Netflix, big earnings event, the first FANG name to report this quarter. This stock's been pummeled, Megan, and you know what? I can't keep track of all the things I subscribe to as far as streaming services go, and then they go ahead and hike the price. I'm old school. I have cable, and then I subscribe to about 10 different streaming services, so I can't keep track of them. Are they losing sentiment as far as your data shows, or did Squid Games actually help them?
Yeah, so this is a really fun time to look at Netflix, partially because they just announced a price hike last week. And so that sentiment that you mentioned, this is a really big indicator for us to see, okay, how do consumers feel about this? How do they feel about the platform? Do they like Netflix enough to continue subscribing? Is this something that's going to push them over the edge? And so far, according to our data, it's not enough. Whenever we look at the overall change in consumer sentiment, so people talking about loving Netflix as a platform or hating Netflix as a platform, we actually see that on a 30-day moving average, the Netflix sentiment is actually improved by about 2 points year over year. So, we didn't record this, a large spike in negative sentiment that I think maybe some people anticipated. So I think that that's a really positive sign, at least in our data, for Netflix moving forward, that, they're able to increase prices even by $1 or $2, but in its largest market, the impact on that will be really substantial for the company moving forward. And in general, whenever you look at just overall consumer sentiment, which is really forward-looking in our universe, we have Netflix only about 4 points behind Disney Plus. So it's definitely in the top of the pack whenever it comes to overall consumer sentiment levels. It's made some improvements over the last year because, Disney Plus, just the nature of the content on its platform lends itself to be extremely positive. So whenever you start to see that gap closing and the positive moves from Netflix, that's another positive indicator. And then the third thing here, these are mentions of Netflix cancellations. So this would be another area that we would look to see, okay, are consumers now, are they pulling the plug on Netflix? Do they have too many subscriptions that they're not able to juggle it? And so far, that's just not what we're seeing. We see those mentions declining on a year-over-year basis and mostly motivated by these kind of politicized, arguments over the type of content that they're putting out there. So I think overall for us, at least from a retention standpoint and an overall just consumer health and consumer happiness standpoint, we like how Netflix is looking.
Hey, Megan, thanks for joining this morning. So, there's a lot of mentions there about potentially cancellations. But, back in the day, it used to be about the churn rate here at Netflix. And I'll just say, anecdotally, I had Netflix and I canceled it mid last year. And then I brought it back on for about a month so I could catch Squid Games. But then I went back to canceling it just once again. So are you seeing in your data any sense that that churn rate is actually increasing and the stickiness of the user is not what it used to be?
I think it's interesting because one thing that you mentioned, that you brought Netflix back on to watch Squid Games, we did see that in our data. We saw a lot of people who talked about rejoining Netflix specifically for that content. And I think that that's one of the big drivers and the positive side of things that Netflix has going for it is its content is so good that consumers are really like it. We did see some strength in overall mentions in this last quarter. A lot of times at the new year, that's when a lot of consumers look to start canceling some subscriptions, when they start to kind of, clear out some things that they're not using as we kick off 2022. And that is the time that Netflix started churning out a lot of content. And I think that that's really strategic. So we did see mentions increase, especially in this quarter that's about to be reported. And so far, at least in our data, we aren't seeing really significant signs of churn, at least not as compared to the levels that we have seen in the past. Then that's really what that's going to show up as in those cancellation mentions. So we like to see those continuing downward for sure.
Yeah, and the consumer happiness here, Megan, pretty surprising. It's elevated up near 75–80%, and that's consistent. But on the next one, the viewership mentions by platform, this kind of tells a story about what Netflix provides, right? It's all about content. You see that increase from 2020 to 2021 as far as viewership market share, where Netflix increases to 28%. or from 25. But then you see a slide in Amazon Prime. Apple TV flat year over year. HBO Max flat. Disney Plus up just a little, and Hulu decreasing. But that kind of tells a story for me when you look at this stuff is if you don't have the content, you're not going to get those, those viewers that, cancel their memberships like Nathan and then comes back on, right? where you rely on that. Is that the key here for Netflix? And I know that your data reflects this, that anytime they come out with a new show that gets a lot of talk, whether it's Tiger King or Squid Games, that you see that bump up. But it's sustainable even with the price target hikes just based on your data, right?
Yeah, I think this was really interesting. Whenever we gathered this wasn't necessarily what we were expecting, right? This is one of those things where we thought, wow, it's really impressive that Netflix, this has been the main player in the game, or at least the largest player in the game. So to see them be able to defend that market share and then not just defend it, but expand it a bit, just to confirm, those are viewership mentions of just people who are saying, I'm watching Netflix or I'm watching Disney Plus, calling out specifically where they're watching some type of content. And I think that this is one of those cases where this doesn't necessarily have to be a binary choice for consumers. I think that they're able to juggle a lot of subscriptions, as kind of you indicated. And at least from our overall trend look, whenever we look at subscription fatigue, so people who are talking about feeling oversaturated with subscriptions, those have actually declined on a year-over-year basis as well. So I think this is a case of managing these streaming subscriptions is a bit more of the norm. And so if you are looking to make a cut, Netflix may not be at the top of your list. So from a retention standpoint, that's really good. Users are engaged. The viewership mentions look strong. Consumers seem happy that are on board. But one thing that we haven't touched on yet, and I don't think we have a chart for, is that subscription growth. So, our data, we lean really heavily on the U.S. and English-speaking mentions. And so at least for us, we still see signs that growth rate is waning. So if that's something that investors key into, that in the U.S. and Canada, if that kind of drags down that subscriber rate, that could be one potential red flag just to watch out for. But one thing that we don't capture is that growth rate in Asia. So these members who may be talking about Netflix and joining Netflix in areas or in languages that aren't English, we're not necessarily going to capture that. So that's just something to be aware of as a trader whenever you're thinking about this name of what's going to be more important. Is it going to be that retention, or is it going to be that subscriber growth?
Yeah, and I think the Squid Games release globally is going to be a big boon for them, maybe on international growth. But what was surprising to me, Megan, before I get your take here on the stock, is that you guys, Netflix doesn't have Ted Lasso, and you see Apple 2% year over year as far as mentions go. Is that surprising to you? Because they're investing a lot of money in their side of the business as far as streaming goes.
Yeah, whenever we look at Apple TV and Apple TV Plus, Ted Lasso was extremely successful. If we were to break out individual shows based on overall consumer levels of happiness, I think Ted Lasso might be at the very tip top of that list. I think its consumer happiness levels were over 90% positive, which just in our universe, that's simply unheard of. So I think Apple proved that they could do it with a show like Ted Lasso, and they're starting to beef up that content arsenal. But overall, whenever you compare what Apple TV has to offer in terms of original content and then what Netflix has to offer in terms of original content, it's almost like they're in different universes. We had to really strictly isolate these viewership market share mentions to just these generic mentions of the platform, because if you were to consider original content, the number of consumers who are talking about Netflix's original content would skew this chart so much it's almost unusable. So I think that especially, consumers of this year, at least, been really excited for The Crown. They've been talking a lot about Bridgerton. They've been talking a lot about these specific shows and these specific series that they're following within Netflix. And I think Netflix realizes that. And, I think that they do have plans to continue to reinvest and keep churning out this content, because that's really what keeps these users around.
Yeah, and what's the score for you guys on LikeFolio on Netflix going into this earnings report?
So we are officially neutral. I think our score came in at around a -7, and a lot of that is due to that subscriber growth decrease. But, we kind of take that a little bit with a grain of salt just because we know that we're looking primarily at English-speaking mentions, and so we would expect to see some slowdown in that growth rate there. But then we also long-term really like to see the improvements in happiness, and we really like long-term that this price hike didn't seem to spook, these loyal Netflix consumers.
Awesome. Great stuff. As always, Megan, we'll be watching that on the earnings event. Thanks. Have a great day.
Thanks. You guys too.
All right. That's Megan Brantley, the Vice President of Research at LikeFolio.